Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
A down day on Thursday in both grain and livestock futures trades. Hedge Seifried is joining us with analysis. Risk-off selling, it seemed like across the commodity board, especially in the greens. Where did that pressure or the risk-off come from, Ted?
Yeah, a couple things that have been brewing. There's some concerns about the economy with the idea that maybe we have a bit of an AI bubble. But then also you had unemployment estimates that were really very poor. So, that's fueling some concerns about the overall economy. You had a lot of pressure happening in the stock market. And when you have something like that, you have your institutional investors or your large money managers, i.e. funds, that want to less risk, and they look at commodities as being high risk. And again, we don't have commitment to traders reports right now. It's been 5 weeks, so we're just guessing at this point. But the trade feels like they could have been long a little over 100,000 soybean contracts coming into today. So that was the one that kind of took the brunt of that. And for corn and wheat, it feels like they at the very least took a pause of covering short positions.
Thursday also looked like some profit taking in the grains, though. Corn and soybeans kind of running up into some chart resistance, didn't we?
Yeah, I mean, at the very least, we were extremely overbought across the board. Wheat, corn, soybeans, all very overbought after the recent rally that we've had. And technical traders, again, money managers, funds, they like to take profits when you get into those, really high overbought relative strength index situations. So I think that had a lot to do with it. If you want to get really technical, yesterday's close in beans matched the high that we had from Monday, couldn't beat it. I think that was one signal that they had to maybe look to take some profits. Corn, you had that outside reversal higher day yesterday, which I think was a perfect setup to go and challenge the 200-day moving average and possibly get above it. But with the pressure that we had in beans, corn reversed and ended up closing on yesterday's low. Believe it or not, Michelle, not a ton of chart damage, even though we were sharply lower across the board.
Was any of the risk-off selling today tied to hangover from the SCOTUS tariff hearing yesterday?
I got the feeling that some people in the marketplace thought that we were going to get an announcement coming from SCOTUS on whether the tariffs are legitimate or legal or not. A lot sooner than this morning Greer said we might have it by the end of the year. So maybe that was a bit of a disappointment for the market here today. Part of the reason why we were under pressure from a soybean perspective, by the way, if SCOTUS were to say tomorrow that these tariffs are no good, we would hope that would even further encourage more Chinese buying. But if that doesn't happen till after the first of the year, or maybe towards the end of this calendar year, by that time it's really too late to hit our export window for soybeans. So does it even matter for this year? So I do wonder if there was some disappointment about that.
Plus, soybean bulls who have led the rally need to be fed, and we really don't have a lot of clarity on China and China purchases yet, right?
Yeah, I mean, that's the thing. I mean, we hear that they're going to buy 12 million metric tons between now and the end of the calendar year, but I mean, that really has to be happening right now. And we've heard a few cargoes, but not anywhere near numbers to get us anywhere close to that 12 million metric tons. So every day that we don't hear more and more about that, you get a little bit more skepticism coming from the trade. And then we look at what Brazil and Argentina are able to sell beans for right now, and it just doesn't make a whole lot of monetary sense. So if they're going to do it, it's going to have to be politically motivated. And again, every day that goes by that they don't do it, it makes us question whether that agreement is going to be withheld or upheld or not.
I wonder if it's possible that, we traded, like you said, all the Chinese euphoria, and really to take this market to the next level, we're going to need some clarity on purchases or purchases themselves from China, aren't we?
Yeah, we need to see the sales. Like, we need to see these bushels starting to move, because if we're going to get 12 million metric tons of exports to China in this calendar year, these sales need to be happening now, because these boats need to be getting loaded now. And really, China's needs are for December and January. And by the way, I don't think China needs anywhere near 12 million metric tons. If they're going to buy 12 million metric tons, it would have to be refilling their state reserves. That's not out of the question, especially if it's politically motivated. But once again, we need these sales to be happening right now. And the other thing is, there was, again, the euphoria of a trade deal, right? When you have market observers or people that aren't usually in a soybeans market, but they're reading the headlines every day about how China's not buying U.S. soybeans, and then all of a sudden you get a trade deal, they figure, oh, that's a wildly bullish thing for the soybean market. But 12 million metric tons of Chinese purchases for this marketing year is nowhere near what I think the USDA had. Again, we're going back to what their September data was, but nowhere near what I think the USDA had penciled in for China. I don't think it gets us anywhere near our current export projections or their current export projections for the full marketing year. So to me, that means that exports are still coming down. And if you don't completely offset that by a lower yield, we're still looking at a growing balance sheet, a growing carryover for soybeans. And it's not tremendously bullish, at least, and not in my opinion. And then you look at the 25 million metric tons for the next 3 years. Well, that's not even average for what we've had for the last 5 years. It's not even average for what we've had for the last 15 years of our exports to China. So basically, all it's doing is saying we're going to do the minimum amount of business to China, or exports to China, of what we've seen in the last 15 years. It's basically like putting a put in on our export program, but it's not expanding our export program.
And Ted, you and I both know that it's better to watch what China does, not what they say. So the fact that we still have a 13% tariff on US soybeans, which is effectively making Brazilian beans cheaper than ours, and they probably bought 20 cargoes of soybeans, is that throwing a little doubt here about China maybe upholding this deal?
Yeah, and even without that 13% tariff, Michelle, Brazilian soybeans are cheaper right now. They are either a little bit more expensive or maybe a little bit more unavailable in December and January, but Argentina can fill that gap. And then they're wildly cheaper at starting at the end of January. But then you throw the tariff in, and then it just makes it so much more difficult. And the thing that we remember about phase one is that China put in a clause at the last minute saying, based on market conditions, meaning if the U.S. is the cheapest in the world, we'll buy from the U.S.
Right.
Basically, not promising anything other than, hey, if the price is right, we will buy, right? And I guess I think as we are a little bit further removed from, again, that euphoria of a deal happening and China's starting to buy what I've counted as 8 cargoes so far, we realize that if they're going to promise these numbers, but then also say based on market conditions, that leaves them an out to really not buy.
Yeah, I think I would agree with you on that. All right, so the corn market has also run up into chart resistance, and really it's been tagging along with either soybeans or wheat. So that was part of the down day, wasn't it?
Yeah, I think there are some rather bullish aspects of the corn market. For one, I think the biggest production numbers are behind us. With the dry finish that we had and the disease issues that we've had, I do think the yield number should be coming down, although it might not be coming down as much as what some people are thinking. We saw 2 private estimates here this week that really didn't have corn coming down at all, for that matter, or hardly at all. Or actually, in the case of one of them, went up higher than their previous estimate, I guess. So there are still some really big corn estimates, yield estimates out there. But exports have been really fantastic, Michelle. Not export sales. We haven't seen those for 5 weeks. We are still getting inspections data, and we are off like gangbusters on corn inspections.
Wheat markets had double-digit losses, even though we got 120,000 metric tons of China wheat business confirmed. So was this buy the rumor, sell the fact, you think?
Yeah, I think there could be some of that. I love the old trading cliches, but it's a really good one. We absolutely do have a tendency to do that, but I think part of that is that we saw those sales and we're like, oh, they're coming in to buy a bunch of wheat, and we haven't seen anything to follow it up. We've not seen follow up sales, or at least not heard any talk of it, or. So now the feeling went from, oh, they could be coming in to buy a fair amount of U.S. wheat to, oh, they made some token purchases to kind of show their adherence to a trade deal, but now they might be done, right? And so just like soybeans, it's a thing of, okay, but that's great, we want to see a lot more. We need to see a lot more before we can really get bullish and kind of sustain the enthusiasm that we've had here these past 2 weeks. And we just haven't seen that these follow up purchases, or that follow up enthusiasm.
Triple digit losses again on Thursday in the cattle market. When are the funds going to be done selling here, Ted?
Yeah, I mean, that's a very good question, Michelle. You really do wonder where the funds are because, again, we're on week 5 of not having commitment to traders reports, but they were really, really long going into this whole thing. I would think that there is still a fund position there. Now, we have gotten really oversold in feeder cattle in particular, below 30% of the relative strength index. So maybe this is a good time for the funds to take a little bit of a pause on exiting their whatever's left of that long position. But I don't know. The thing is, Michelle, is that the fundamentals of the tight supply situation, or the fact that we really haven't seen consumer demand for beef fall off, all that remains. This is all just because we have an administration that has been very vocal about wanting to lower beef prices. And when you have large speculators in a market that have record long positions, they get very nervous about what lengths the administration might go to to lower beef prices. So they don't like that climate. They don't want to have that risk. It gives them a reason to want to get out of their what were record long positions. The other thing is that we have ongoing talks with Mexico about reopening that border. Last week, we were talking to the Mexican Minister of Agriculture. This week, it was Mexican President Steinbaum talking to Brooke Rollins about getting that border open. And while there is still no timetable on reopening that border, it does make the market feel like the intensity of these talks are leading or suggesting that both sides are pretty anxious to have this happen soon. And that is another reason why funds don't want to stick around to see what happens with that, because that uncertainty does not make them feel comfortable. So, as long as there are things that are potentially going to change the fundamental situation from the cattle complex perspective, I think we're going to be on the defense for now.
Yeah. All right. Thanks so much, Ted Seifried, Zaner Ag Hedge. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.